Hello, everybody. Today is Saturday, September the 21st, 2013. My name is Michael Wright, and this is the weekend Elliottwave video. Just before going forward, please do pause the recording and read over the risk disclaimer. All right. Nice rebound into the end of the week that we saw a couple good trades where the pound Swiss shorts booked for about 130. And then we also booked the Euro Aussie longs for about 65. Currently, we have three open positions. Those three positions being the Kiwi dollar shorts, the Euro Kiwi longs, and the Euro pound longs. Okay. So going to chat about those three trades and also talk about what we are looking for as we kick off the last couple of days into September. All right, so first and foremost, let's take a look at the open trades and why we are in those positions. So first and foremost, Kiwi dollar, I really do like still shorts against these highs. We have it for 84.40, so it's only a new high that will negate it. But one thing to really keep notice of is this horizontal resistance line. Okay, so we broke back under, and then if you draw a horizontal line, we have wicks above, but price action never made it close above. If it does make it close back above this area, I'll close those shorts for a slight loss. But that is what we are looking for. And then my targets now are 82.50. However, so long as we start to break down, I will look for those targets against this support line, and then I'll look to flip in to get long. So again, the idea set here is to stay short, targeting the support line. I may revise, or I will likely revise my targets to 82 flat. That will give us about 180 pip advance should prices indeed play out as I'm expecting. All right, and if you look at correlation base, another reason to stay short is looking at the Aussie dollar. Aussie dollar already made its move lower, and indeed it did go ahead and break this support line. Probably would have bode well to hold those Euro Aussie longs, but I just needed to book some profits, take away some of those early losses. Okay, and really hold on to them. And same thing with the pound Swiss. I still like Euro pound longs, pound Swiss shorts, Euro pound longs. Same idea set. You know what? One of the members earlier this past week were asking me. If we take a couple of trades in this, but the same way, let's say Aussie yen short, Euro yen short, pound yen short, are we over leveraging? For me, I take all trades in the same direction in terms of risk on or risk off. So it doesn't really matter. In my opinion, it's all about the risk management that you incorporate behind it. All right, but to go back to the Kiwi dollar, as long as we stay below again that horizontal resistance area, we are looking for downside support next around 81.80, but by that time maybe around 82. So likely I will go ahead and modify those targets. Meanwhile, Euro Kiwi is another interesting bit. Euro Kiwi, we have breaking resistance here. Here's a obvious downward trend line resistance. So looking for upside movement. I have it for 163, but it's all really about where we see the Kiwi dollar once that hits support. So I will likely modify these targets as well. I'll push a higher for 164, but the big basis here is as soon as Kiwi dollar touches support, I will look to get out of Euro Kiwi. Why is that? The reason why is because they have an inverse correlation. Right, you could look at the two charts, and then you could obviously see Euro Kiwi falls, Kiwi dollar rises. So you expect the opposite. If Kiwi dollar falls, Euro Kiwi should rally. But looking at the Euro Kiwi on a higher time frame by itself, we have this broken support, so a retest could come about 164 anyway. So that's reasons why I say I will revise those targets. Right, 164 will be an obvious back test, and then this will be an obvious in my opinion, 1, 2, then 3, 4, 5 of that sort. We do have bullish momentum divergence here as well. You see price action low around 164. However, prices continue lower, so this provides a basis for those longs. All right. Other than that, we are still in the Euro Pound long, which I really like. Euro Pound still targeting that 85 zone, 85 horizontal support, 50% Fibonacci retracement on the 86.52 to the 83.50 down move. And then we already had this breakout. Same idea set, bullish momentum divergence. So looking higher. Again, that provides that basis for that pound switch short before, but I'll take that book for 130. And if for any reason there's a setback, I'll look to buy euro pound lower, and then I'll look to sell pound Swiss higher. All right, so those are the three that we are currently in. But now let's look at some other pairs for potential setups. Dollar CAD is an interesting bit. Again, another breakout. So across the board, breakouts. A little bit upset about dollar CAD because it was pretty obvious on to buy it around 102. 102 was the measured move, 100% Fibonacci extension. So you have equal legs, and then you also had trendline support. All right. So besides that fact, in my opinion, dollar CAD could get back into the 104 zone before shorts recover. So if that being said, let's look for setbacks in dollar CAD for longs. All right. So the ideal plan, I would like to see a gap down. Honestly, that is preferred. If I see a gap down on dollar CAD to 102.70, I'll look to buy it with stops 102.50, about 102.30. 102.30 is likely, giving you a 40 pip stop from 102.70 and then targeting 104. All right, so a little bit more than 2-to-1 odds. Same thing goes for any other commodity across the board. Setbacks, and then look to get on board in the direction on the dollar train. All right, if we take a look at the dollar index, everything is the same thing. All right, still need to break, but we're breaking in the currency crosses already. Yens, I'm staying away from for the last week. We'll monitor them though. Only yen pair that's appealing is a dollar yen on a setback towards, let's say, 98.60, 98.50 about. Possible inverse head and shoulders as well, but only a setback here, and then look for longs again, making this high move A, B, and then C wave coming in about 102 with that top side resistance of an obvious zone that marking 101.60. All right, so I would need to see a setback in dollar yen a little bit, and then look to get along the dollar. So across the board, the outlook is the same. Staying risk off in terms of the dollar crosses, but then looking against the yen elsewhere. Alright guys, I want to thank you all for watching the weekend Elliottwave video. If you have any questions, please feel free to Skype me. My Skype is wtcg.mike, or you can jump in the chat room and chat to us, or even shoot us an email at trade@rightinv.com. Cheers everybody, and good luck trading.